Hello guys, this is Rydon Academia, and today we're looking on how to prepare a purchase ledger control account. Okay, now a purchase ledger control account is also called a total creditors control account. That means it's prepared to show the aggregate or the total amount owed to our creditors or our suppliers. Okay, now in our debtors ledger, I showed you how we can discover the total amount our debtors are owing us. But in this case, the total amount we are owing, alright, the business is owing to suppliers or its creditors. Now, in preparing our total creditors or our purchase ledger control account, I'll be giving us the format, okay? You can call it a total creditors control account or a purchases ledger control account, okay? Alright. So now in this case, in our sales, like I told you, because in our sales ledger, sales is credited. In this in the total sales control account, sales was debited. Likewise, in our purchases ledger, purchases is usually debited. So in our purchases control account, purchases is credited. Okay, our total purchases come to the credit side. So in this case, our balance brought forward, which is the total money that we were owing to our suppliers from the previous month. Okay, our balance brought forward here refers to the total money we are owing to suppliers, okay, from the previous month. We have our balance brought forward. Now in this case, the format is the reverse of the format I showed you in our sales. Okay, now in our purchases ledger control account, our credit side is carrying the increased value. Alright, so every value that will increase the amount we are owing to our suppliers will be crediting it, whereas every value that will decrease the amount we are owing to our suppliers, we are debiting it. Okay, so it's just a reverse of your sales ledger. Here we are crediting increase, debiting decrease. In our sales ledger, we were debiting increase and crediting decrease. Okay, now our balance brought for, like I said, the balance from the previous month we are owing to our creditors, so it will be increasing our balances, right? So we are crediting that. Now we have our total credit purchases. We have our total credit purchases, okay, for the month. Okay, that will also be increasing the amount we are owing to our suppliers, so we'll be crediting that as well. Now we have on this side we have the cash paid, all right, or cash sent, all right. Any of the English is still correct. So cash paid to our suppliers or the check paid to them in case of transfer or drawing of check. Okay, so check paid to suppliers, all right. Our checks paid to suppliers will be reducing the amount of money we are owing to our suppliers, so we'll be debiting that. Okay, now in purchases we have what is called discount received. All right, we are receiving from our suppliers for paying on time. All right, when we pay our bills on time, we have a discount received, and when we receive a discount received, we'll be reducing the total money we are owing to suppliers. So our discount received will be debited. Okay, our discount received will be debited, right? Then we also have our returns outward. Now when the business buy goods and they're not satisfied with the product, they also have the right to return it back to the suppliers. Our returns outward will reduce the money owed, okay, the money you are owing your suppliers. So we'll bringing in, we'll be debiting our returns outward, right? Debiting our returns outward. We also have bills payable. The same way we have bills receivable that was sent to customers. Okay, bills payable was sent by the supplier to the business, alright, to show how much the business is supposed to pay to them. So when we have our bills payable and the business has accepted it, then in that case it will be reducing the amount owed by the business. So we have our bills payable accepted, all right, together. So we have also, in the case of dishonored checks, all right, dishonored check that was taken to the bank. In our bank reconciliation statement, I showed you that some checks can be taken to the bank and the bank will reject it due to wrong signatures, maybe incorrect date. Okay, now when we have a dishonored check will be increasing how much you were owing. Okay, you have drawn the check before. As you can see, we have check paid to suppliers. We have entered it in our book that we gave a check to our supplier. Okay, so we have debited our account. Then when our check was dishonored, that means the amount we thought had been reduced, okay, is coming back to. So every check dishonored or dishonored check, okay, a dishonored check will be increasing. Like I said, dishonored check will be increasing the amount owed to our suppliers. So in this case, you must understand that on your credit side is your increase column, okay, and your debit side is for decrease. So there are many other formats like I said, but you must know this. So I'll be preparing an account together. We'll be doing it together. I'll take a question and then we'll solve together to understand more about our purchases ledger control account. Alright, we'll be taking a question together. Mr. Ojodu had the following balances in his books, okay, on 1st July 1995. Alright, we have our sundry creditors for 9,724 naira. We have our debit balance in purchase ledger 660 naira. Now the following transactions took place during the month of July. Alright, payment to creditors of 28,368 naira. We have bills payable accepted 15,129 naira. We have discount received 1,838 naira. We have purchases, returns and allowances 749 naira. We have sales and purchases ledger transfer, that's our set off, right? 1,498 naira. We have our credit purchases 47,317 naira. Then we have purchases debit balance at a close of the month, okay, we have 856, and we are required to prepare the total creditors control account for the month of July. Alright, so we'll be doing that together. We'll be taking all the accounts into consideration. Like I said, the first thing we do when preparing our accounts is to identify the owner of the account, okay, and then address the account appropriately. So this account belongs to Mr. Ojodu. Alright, so this is the owner of the account, and we are preparing a total creditors control account, which is also the same thing as your purchases ledger, okay. Alright, so we have addressed the account. Now we can start entering in or posting in our entries, okay. Now the first one we have, now this was not a transaction for the month, it was a balance brought forward, okay. So we have sundry creditors. Sundry, like I said, creditors in case of purchases are credited, sorry. They are, in the case of purchases, creditors are credited, alright. Creditors are credited. So we have a balance brought forward, that is a balance from the previous month, alright, as shown to us. Sundry creditors talks more of the balances, okay, from the previous month. We have 9,724 naira. So our naira sign 9,724 naira. Alright. The next we have is a debit balance. Alright, that is also a debit balance from the previous month. So we'll be entering this on the debit side, balance brought forward. Like I said, debit balance simply means our balance brought down is on the debit side, okay. So we have our balance brought forward of 660 naira. So my naira sign 660 naira. Alright, now we have come to the transaction that took place during the month of July. We have payments to creditors. Now, like I told you, don't forget the credit side records increase in our purchases, okay, in our purchase control account, and the debit side records decrease. Alright, so this is just the format we'll be using. Okay, so we have the first thing I was saying is payment to creditors. Now, payment to creditors will be reducing the amount owed, okay. So we'll be entering this on our debit side. Okay, and that was 28,368 naira. Okay, let me get space. We have 28,368 naira. Alright. Now the next was bills payable accepted. Alright, so we have our bills payable accepted, okay, and that will also be reducing the amount we are owing to our creditors. So we'll be debiting that, okay. We have bills payable accepted. Alright, and that was 15,129 naira. 15,129 naira, okay. Now the next thing we have is a discount received. Now the discount received from our suppliers to reduce the amount owed to them, okay. So our discount received will also be debited. Alright, a discount received of 1,838 naira. That's our discount received. Alright, the next we are having is purchases returned. That's the returns outward, okay. Purchases returns will also reduce the amount we are owing to our suppliers. So we are debiting our purchases returns. Alright, it's also called returns outward. We have a returns of 749 naira. Alright, now the next is a sales and purchase ledger transfer. This is also our set-off, okay. I was telling you about our set-off, where your customer is also your supplier. Alright, so in this case our suppliers are also our customers. Alright, so our set-off will be reducing the amount owed. So the set-off, okay, our set-off is what they said, your sales and purchase ledger transfer, which is 1,498 naira. 1,498 naira. Alright, okay, the next one we are having is our credit purchases. Now credit purchases will increase the bills you are owing to your suppliers. So for our increase, we will be crediting it, okay. We have our credit purchases. Alright, credit purchases of 47,317 naira. Right, and the last one we are having a purchase debit balance at close. A debit balance at close. For you to be having a debit balance, that means the balance brought down is on the debit side, and if your balance brought down will be on your debit side, that means your carry down must be on your credit side, okay. So that means our balance carry down will be on our credit side. Alright, so our balance is 856 naira. Right, so with this we'll be totaling our account very quickly. For our debit side, we'll be adding all this, okay. Alright, so our total debit balance, okay, we'll be having a total of 48,242 naira, okay. Then for our credit side, we'll be adding our balances or our figures together, and then we'll be having 57,897. So as you can see, our credit balance is exceeding our debit balance, right. So that means our balance carry down will be coming to our debit side so that we can have a balanced account. So in having our balance carry down, we are lessening the smaller value, which is our debit side, from our bigger value, okay. We'll be having a balance of 9,655 naira. So these are the things we'll be entering into our account. Alright, so for our balance carry down, I'll be writing that here. Balance carry down, since this is our smaller value, okay, we'll be bringing our balance carry down to balance of the account, 9,655 naira. Alright, so with this we can balance up our account. We're balancing up our accounts. Okay, so when we total this, now we should have a similar balance, okay. So we'll be having 57,897. Alright, we're having same amount here. So we are closing our accounts for the month, alright? So we have closed our accounts. Now we're bringing in our balance breakdown. Every balance carried down is a balance breakdown, okay, for the next month. So that's why this is a balance carried down. So for the next month, it will be a debit balance, okay? Balance brought down. That's why the question said a debit balance at close, okay? So balance brought down of 856 naira, alright? Then our own balance brought down from our solvents, okay? We are having a debit carried down. That means our brought down will be on the credit side, okay? So our balance brought down will be 9,655 naira. So with this, we've come to the end of our total creditors control account or our purchases ledger control account. Don't forget to subscribe if you have not subscribed, like our videos and share with others, okay? See you in our next class. Thank you.